Hello, this is Rick Jordan, the Church Resources Coordinator for the Cooperative Baptist Fellowship of North Carolina. Welcome to today's webinar. The webinar today is on Ministers, Are You Ready for Tax Season? It is being presented by Gary Skeen. For nearly 18 years, Gary was the president of the Church Benefits Board of the Cooperative Baptist Fellowship. He serves as President Emeritus there now. For over 7 years before that, Gary was the coordinator for finance and administration of CBF, and before that was the director of financial services and the controller for Southwestern Baptist Theological Seminary in Fort Worth, Texas. He did that for 13 years. As an ordained minister and deacon, Gary has a heart for ministers and for the church. Today's webinar will begin with Gary's presentation, and if you have questions or comments, then you can scroll to the bottom of your screen and there's a Q&A box there. You can click on that, enter your questions, and we'll present the questions at the end of our presentation. Thank you for joining us for this webinar. The webinar is being recorded and will be stored on the CBF North Carolina Virtual Resource Library at cbfnc.org. Gary, welcome. And I understand you have a few resources you want to share with us before you actually begin your formal presentation.
Very good. Good morning. Glad you're here with us. I thought I would mention, and a great deal of the presentation has come from two different resources that are available on the Church Benefits Board webpage through CBF. The first is Ministers' Taxes Made Easy. It's actually courtesy of the ECFA, and they've allowed us to use that electronically and post it on our webpage, along with Church Reporting Made Easy. These are fairly reasonable reads and good resources, both available electronically. Now I'll go to our PowerPoint. I will not spend a lot of time because we've got lots to cover this morning. Hope you can see it well. And the whole idea is that I will begin to give you some information. The first step is I will walk through the various topics we're going to cover today without a lot of description, but at least to give you an idea of what's on the agenda. And if I've missed something that you need to talk about, then the question and answer time will be for that. I would caution all of you as you read, even these resources, that you have to be very careful about dates and effective dates. For instance, you'll see these guides are entitled the 2019 tax season, but they're prepared for their 2018 tax return. So effective dates of the law and what season you're talking about become very, very important, and you'll see that as we go through some of these items. You will, the PowerPoint is here. We will go through, the idea was to cover new items, but there are several items that I think are important, sort of hot topic items. So I've both new items for this tax season and some hot items as we go through. Excuse me. First, we will go through the list of the items that we're going to cover so you can kind of see what's there. If we're missing something that you need to talk about, well, then that's what the question and answer. I'm happy to cover other issues if you need help. I want to talk a little about dates and the difference in terminology and effective dates that becomes very important. Housing allowance is not, there's nothing new for 2018, but it is a hot topic, and there is quite a bit going on related to the housing allowance. So we will talk about that. Changes in standard deduction is probably the most common thing that all of you have heard, but you need to couple that with the loss of the personal exemption, and we'll talk about that. There are some changes in state and local sales tax and property taxes in the way those are done, and the loss of moving expenses and unreimbursed employee business expenses is a significant change. Medical expenses limits have changed a little bit. Penalty for the individual mandate is one of those very confusing things, and we'll talk about it. The child tax credit has doubled. The change in the miscellaneous deduction, again, includes employee business expenses. And then in church reporting, there is a new tax, a parking lot tax that we'll talk a little bit about. It's very complicated, but most importantly, I want to make you aware of it. reimbursement rates, new contribution limits, deductions from payroll for employees for FSA and benefit deductions and reimbursement, employee classification, minister status, payroll tax withholding, and some highlights for contribution rules. Excuse me. As I said, you have to be very careful with effective dates. I'm going to mention this again in a couple of places, but people talk about the 2019 tax season, but that's the season when you prepare your 2018 return. So you have to be very careful as you read. You also need to recognize that people will talk about one specific change and not talk about other related changes. You'll see that when I talk about the deduction and the loss of personal exemption. Housing allowance is not new, and nothing has changed for 2018 for the taxes as you per now from other years. But in 2017, the federal court in Minnesota issued a ruling that the housing allowance is unconstitutional. However, there were lots of complications related to that. It dealt only with the cash payment or payroll where you're paid a compensation amount related to housing allowance. It did not address the parsonage. It did not address retirement benefits for ministers. It did not address the self-employment status of ministers with regard to Social Security taxing. All of these are very complex issues. It has already under appeal, so it is not effective now. We do not know what the timing of hearing that appeal will be. Also, previously, when this has been challenged, it's always gone to the Supreme Court. So even if it is on appeal, not overturned on appeal, there's a chance that it'll also be taken to the Supreme Court. We are aware of various groups, the ECFA and other church benefits association, that are working on legislative options should this case not go or should the housing allowance be permanently ruled unconstitutional. Again, there are no changes, but there's a lot going on. I wanted to address that with you. Probably the largest change in the tax law for 2018 is the change in the standard deduction. I used one example. Standard deduction varies by whether you're single, head of household, married, or you're actually filing status. I used married just because it's the most common, but it has gone from $12,700 to $24,000. So you can see it's nearly doubled. This will mean that many people no longer use itemized deductions. This is what was termed the major benefit, the tax reduction that when the law was passed would benefit most people. But you have to take it into consideration with the next item, the loss of your personal exemption. In prior years, you received a personal exemption for each person in your family. For 2017, it was $4,050 and was indexed for inflation, so that in 2018, it was to be $4,150. But this personal exemption was eliminated by the Tax Cut and Jobs Act. So while you have gained in standard deduction, you have lost the benefit of a personal exemption, and you'll be able to see if you had 3 people in your family in 2017, that was more than $12,000. And so in reality, while your standard deduction has gone up, you may not experience significant tax decrease because you've lost your personal exemption. So again, this varies by your classification, but it is something to be aware of. Also, another case where if you begin to read some tax law or regulations, if they're not completely new and up to date, you'll see that there's an exemption for $4,150, but when you get ready to file your return, that doesn't exist because it was eliminated by the Tax Act. Now talking about itemized deductions, if you exceed the $24,000 and have itemized deductions that exceed that, or again, whatever the limit is based on your status. In many cases, there were state income taxes, property taxes, sales taxes, and in some cases you take one or both or alternated between the two. Now it's much more open, but there is a $10,000 cap. So the most you can take in all state or local taxes is a $10,000 amount. The same moving, so you can see that even though you have a larger standard deduction, if you itemize, there are also limits on itemization. The next thing is a major issue for ministers. Unfortunately, or fortunately, depending on your situation, ministers move fairly regularly. The moving expenses are no longer deductible as a tax deduction, along with unreimbursed employee business expenses. If the church pays for ministers' moving expenses, that is taxable income to the minister. And so you can see that in a year when you move and you pay those expenses, and if that is, and they pay those expenses and add it to your income, you're going to have a significant boost in income for that moving year. It will have tax significance both for self-employment tax at this point and for income tax. And so in addition to the moving expenses, you may need to consider that there is a tax impact to that would need to be taken into account as you make your arrangements to move from place to place. I'll talk a little more later about reimbursed, unreimbursed employee business expenses, but that is lost. Also, it makes an accountable plan, you'll see in just piece for churches to do now. We've been recommending it for years, but it's now almost mandatory to have some fair tax for the minister and your staff who have out-of-pocket expenses related to ministry. Medical expenses, many people were limited to there's always been a limit on the amount of medical expenses. You had to have over a particular amount before you could deduct those as an itemized deduction. That has been increased to 10% from the 7.5% that it has been in the past. So that medical expenses, again, are limited, but not as much as before for itemized deductions. This is one of those things, if you look in the tax guide that I recommended, you will see that they say the individual mandate under ACA for not having medical insurance is no longer valid. Although when you go to file tax returns, you're going to find that it is still valid for 2018. It actually is eliminated in 2019. So if you do not, we're not covered by adequate medical insurance, appropriate medical insurance under the Affordable Care Act for 2018, you may owe a penalty. There are many exceptions, and many folks meet one of those exceptions, but that is something you'd have to keep in mind. The child tax credit is increased to $2,000 per child, but only $1,400 is refundable to the low-income taxpayer. So depending on you can use up to $2,000 per child to offset your tax, but if you don't owe that much in tax, they're going to reduce the amount that's refundable to the taxpayer. This is what I mentioned earlier. The change in the miscellaneous deductions includes employee business expense. So there is no deduction for unreimbursed employee expenses. So if your church is not reimbursing your staff and ministers for out-of-pocket expenses, they no longer have the opportunity to deduct those, even though there was a limit in the past. They could deduct some of those if they itemize deductions. Since more people will not be itemizing, and because the unreimbursed medical expense has gone away, it is more important than ever to now have a accountable reimbursement plan where they turn expenses in and are reimbursed for those expenses. It really becomes an unfair burden, tax burden for ministers and staff to pay out-of-pocket expenses. So that's really important at this point that we deal with that. Church reporting, these are the issues that have come to light. That most of these, again, are not new, just changes in rates or something, but the parking lot tax is new. It actually was a part of the Tax Act. It was supposed to be effective for 2018, but there was such confusion and problems and no regulations and understanding of how it worked, that for 2018, the IRS delayed the implementation to 2019. And we got some information, but it's still very unclear. One, even how you calculate this parking lot tax, and tax is a little bit of a misnomer. Essentially, the law says that if you provide parking to your employees, the value of that parking will now be considered unrelated business income for the church. Churches normally don't file a 990. If they have unrelated business income, they might have to file what's called a 990T and pay some tax on unrelated income if they rent a parking lot or something like that. Part of the difficulty is that if you don't rent and you don't have a way to determine the value of parking, how do you know how much is unrelated business income? The guidelines have eased up a little, and we are hopeful for a legislative repeal of this provision. If you do rent your parking space as a church, you have sort of by default a value of your parking lot because you're charging for that during the week if you rent it or some other time. And so you really need to study this provision and watch what happens in terms of regulations and or law changes during this year, because it could be that for 2019, again, I'm talking 2019, churches might have unrelated business income and need to file for the value of parking they provide to their staff. Next, reimbursements rates, the mileage rate of 54.5 cents for 2018 and 58 cents for 2019. Again, because there are no employee business expenses, many churches might reimburse at a lower rate. And in the past, a staff member or a minister could take the difference and use it as an expense on their own tax return as an employee business expense and potentially get some deduction for the difference between what was actually reimbursed and the standard mileage rate for IRS. That's no longer available. So what you reimburse will essentially be what is excluded or what can be paid for that. And as I always say to folks, there's no reason to think IRS is overly generous with their mileage rate. For charitable miles, just for information purposes, for people who do mileage and do volunteer driving for your church, the rate of 14 cents a mile is the same for 2018 and 19. Contribution limits for salary reduction for contribution for 2018, that limit is $18,500. For 2019, it's $19,000. Again, this implies, this is only for the employee's voluntary deduction. The employer can actually make contribution to a retirement plan without regard to these limits. There is an overall limit, but it rarely comes into play. Just for information purposes, churches often get asked questions about gifts from one individual to another, and the gift tax exclusion rate has stayed the same at $15,000 per year. FSA benefits, deductions for child care, for medical reimbursement, for other things and reimbursement for those is still a very gray area. Because of ACA made changes, IRS interpreted those changes one way. The court later came in and said that's inappropriate. IRS backed off a little bit. And so it's a very difficult area. If you treat all full-time staff members in the same way, it's pretty clear that you can still continue to pay for reimbursement of insurance costs as a pre-tax benefit. Or if you have a single minister on staff, that's very clear. Other than that, if you're going to do childcare expenses or other things, it's better to have a FSA Section 125 plan in place. They're not expensive and can very easily be done. This is one of those areas where you, depending on how you do it, you may want to talk to the Church Benefits Board and or your insurance provider to get clarity and at least some assurance about how you're handling this. Employee classification is a hot button issue for IRS. As we've said in the past, most ministers are employees, even though they are self-employed for self-employment tax or Social Security purposes. This really deals with whether you have self-employed contractors. The place where this comes into play quite a bit is if you have musicians that you hire on a regular basis. Are they self-employed contractors or are they employees? IRS, if it's an occasional thing, it's generally not an issue. But if it's a fairly regular basis, they're most likely going to treat those as employees, although many of them work for multiple organizations and are, in a sense, self-employed. But for most musicians, you control practice time and all sorts of things when they perform and so forth. And so it becomes very difficult to argue that they are self-employed contractors. The next item that comes up pretty regularly is who is a minister, what gives you, quote, clergy status under the tax law. Licensed, commissioned, ordained is sort of the fallback answer, but it really has to do with how you as a church view each position. Do you view this position as a minister? And in Baptist life, churches are independent. They all have their own ideas. What I would encourage churches to do is to well document what positions you consider to be a minister. It is a great benefit. There is a term under the law called ministerial exemption, which basically means the courts will not, because they view the hiring of a minister as a spiritual decision, spiritual relationship, they will not interfere in your contract with a minister. Now, again, there are limits to that, but there are many times when if you have employees who are classified as a minister, they meet exemptions under a great many places in the law. For churches that operate schools, do you consider your teaching staff ministers? And if so, do you document it? It can make a great deal of difference in many cases when it comes to labor laws and other things. Do they meet the ministerial exemption, and have you documented it? Payroll tax withholding is really just a reminder, because ministers are self-employed for Social Security taxes, the church cannot pay their Social Security or half their Social Security as they would for an employee, but they can withhold additional amounts of money as income tax to cover that self-employment liability at the end of the year. That's a great way for ministers, rather than having to make quarterly payments for Social Security taxes and have income taxes withheld. It's a convenient way to often remind churches that I think it's very healthy to have what I would call a Social Security supplement for ministers. It's changed from year to year, that whenever you give an increase to a minister, it has Social Security income tax ramification. And by earmarking a part of that, it keeps you conscious of what those effects are and the compensation and any changes in Social Security law. It is income to the minister. It's not paying taxes. It's additional income, but it's an important feature that I think keeps churches on top of what's happening in terms of ministers' compensation. The last one, I continue to find churches that provide receipts or contribution statements and do not have the magic words on the statement, no goods or services received as a result of this contribution. IRS in many cases has come in and disallowed tax deductions for contributions because those magic words were not on the receipt or the annual statement. It only comes up when someone is audited, but it can be a significant penalty for your people who've made valid contributions because you've left off these important words. So I continue to remind churches to make sure that their receipts and their contribution statements have those magic words on them. I've gone through a lot very quickly. Here are the resources. The minister's taxes made easy in church reporting, courtesy of EFCA, is on the Church Benefits Board website. You're welcome to go to that. I personally like the 2019. Again, this is for 2018, but it's 2019 Church and Clergy Guide that's published by Church Law and Tax of Christianity Today. It's a fairly significant, thick resource, but it's a comprehensive guide to taxes and a good one. The Church Benefits Board wants to be of service to you. We are not a tax provider or a tax office, but we deal with many of these things on a regular basis and can be helpful. My email at Church Benefits is still active, so if you need to contact me or have questions after this, you may have a question that's personal that you don't want to bring before the whole group. I'm more than happy to be a resource and helpful to you in any way that I can. Rick, I think that sort of ends the presentation and lets us go to questions and answers.
Good. Thank you, Gary. Let me ask, there's a question on housing allowance and not housing allowance, on moving expenses. What should be a strategy for the person who's talking to a search committee or a church that's calling someone so that it's not a penalty to that minister? How's the best way to handle that?
I really think I gave as one example is Rob Fox came in as the new president of the Benefits Board. We put together a package to pay for his moving expenses, but we recognized that he would have a significant tax impact to this year because we would pay his moving expenses. And so we actually built into our plan of compensation for this initial year, additional compensation that would be a one-time compensation to help him have money available to pay the tax on this moving expense benefit. Mm-hmm. It is a significant burden to move. It has significant cost. It has been customary to be helpful or to pay moving expenses, but now there's one more factor in that they are taxable, and so there's a tax impact to this that's not been there in the past. Mm-hmm.
All right. Well, thank you, Gary. That's the question that we've received, and I really appreciate your knowledge and insight and sharing this information with us. And as you have said, there's even more available online on your website. And so for our listeners, you may go there, and then also Gary's email is there if you want to speak with him or contact him further about these. Thanks to all who joined us today. It will be recorded and put on the CBFNC Virtual Resource Library. So I hope you'll share that with others and let them know that we've been providing this resource for you as well. And thank you, Gary, very much.
Thank you.